It is January the 19th. Michael Vaughn with Brian Acker. Brian, 2011 is off to a terrific start.
Yeah, we're up about 3.5% in each country in the U.S. and obviously in Canada. So
outperforming the index in both?
Outperforming the index in both.
You do great things in a rising market.
Yeah, in a flat market.
In a flat, yeah.
But yeah, and there's all kinds of value out there, as I said on BNN last week. So.
Huh. Well, I want to talk to you about a rather argumentative piece in the Globe and Mail today. Our friend David Rosenberg, he's saying this is an incredible bear market rally and will end in tears.
Oh, well, I think the only asset class that may end in tears is actually fixed income and not equities. Yeah. I think equities, as with real estate, is your only protection in this market. So let's go back to our premise. All you have to do is pick up a newspaper anywhere in the world, and inflation is breaking out big time.
Yep. Yep.
Let's go to China. Inflation now is running at 5.5%. So when we actually say that, people don't even know what that means, actually. So let me give you a small calculation.
Well, let me break it. I mean, he is saying it's a deflationary environment, except for commodities. Now,
okay.
That's a strange definition, I'll grant you.
Right, but commodities feed into the final goods. But what's been happening over the last 20 years, keep in mind that companies have been, even though their input costs are as they are today, skyrocketing, they actually are getting efficiencies by not employing people, finding, obviously, technology, productivity enhancement goods. But my previous point is, when we say a country has a 5% inflation, what does that actually mean in terms of how to think about what that means? And so at 5.5% in 10 years, the currency, the renminbi in China, will only be worth 58 cents compared to what it's worth today. Correct. That's what it means.
Correct.
Even at 3.5% in 10 years, it's only worth 70%. So these currencies all over the world, with these high inflation rates, India is over 8%. So their currencies over time are falling appreciably in terms of inflation.
I would agree. And the U.S. greenback with a $14 trillion debt.
Yeah, but what they're trying to do is inflate their way.
Of course.
So, so literally, this may be deflation. The Federal Reserve and QE2 is trying to inflate.
No doubt.
But look at Europe as another example. Portugal, Spain, even the, if you will, the core of Europe, inflation is probably running at 3.5 to 4%. So inflation is breaking out all over the world. If you look at those specific countries, fixed income in these countries have fallen appreciably. Yep. And our big $64 million question is, when does it happen here? Because even in Canada, for instance, I think inflation is riding higher than what it seems.
We are not an island.
We are not an island. But what the federal government is trying to do with their change in regulations on Monday is try to not do it in the real estate. These poor, I call them the fringe people who can't afford real estate because of these new rules, they really can't protect themselves for inflation. Fat cats like yourself, Michael, real estate all over the world, and of course you get to protect yourself in terms of inflation, which ultimately will, real estate's a great, obviously a protector of inflation.
No, so, it certainly is.
So this is what I think we're gonna see. Now, politics is trying to suppress inflation all over the world. That's what you see daily in the paper. But you see food prices, onion prices in India, rice prices. These are going at double-digit rates, and where is it going to end? I'm not sure.
I'm with you. You know, in spite of the fact that Rosenberg's saying this bear market rally is going to end in tears, he says you should focus your strategy on high-quality companies and dividend-paying stocks. Hello.
Well, yeah. Large cap value has a lot of value. So you can see this every month. We print our portfolio in terms of what the companies and what the model prices are, and we have a 60% upside in these companies.
Yeah.
Intel, company's been in our portfolio for a while, had great earnings, record profits, but their chips don't go to the iPad, so investors don't want it anymore. But fundamentally, it has an upside to model price of almost 40%, which is massive. So, and it pays a dividend of 3.5%. So I think through that, you protect yourself from inflation. Inflation is here. It's going to be big. I think it's going to be a big news story, if not this year, next year. And we'll see countries try to clamp down, if you will, on inflation. So that'll be interesting in terms of markets.
Briefly, then what is the fixed income strategy? Everyone has fixed in their portfolio.
Well, our fixed income strategy is a ladder. We go out maybe a year, and we want to make sure it's CDIC insured. Yep. The last bear market we've had in fixed income, was in 1994. Half this gray hair came from 1994. That's now 16 years ago. Investors certainly, a lot of the investors today have no idea what a bear market in fixed income is. That's what we worry about, not deflation, but inflation. And I think investors are perfectly positioned, certainly in the Acker Finley accounts, of that inevitability.
Brian, always interesting talking with you. I'll be in to see you in about a month's time in the middle of February. Thanks.
Good to see you again, Michael.